Hello, folks. This is Indices Market Review. Today is June 11th. I really didn't delete much from my chart just because I actually didn't want to mark everything up again. So let's begin. Let's delete that. Let's delete this. Alright, let's delete that as well. Delete this. Alright, cool. You know what? Let's delete everything. I just changed my mind. Alright. So today, before market opened, um, both assets actually delivered sell side at market open, and before that it was going towards sell side. So here we had relatively equal lows, right about there. I'll just do that, and ES same level right about here. All right. So in the dump, in the sell-off, market actually formed several S&T divergences at the highs, right? Or in overnight price action though. So the first one is right here. The second one is right about here. Oh my god, okay. Right there. And then scanning a little more. I think there was one more. One more. The rest is not S&T. So here, as you can see at open, as market open, market was not in sync. So basically, when Nasdaq was rallying, ES was dumping, which is a rare occurrence, right? So because of that, I think everyone should have just like avoided the New York Open. But here, it rallied initially. There is, I think there was an S&T divergence at the lows. Not sure where it was. Oh, here, right here. And then, yeah, that's it. So the S&T divergence sent the price a bit higher. Immediately after it broke down, followed ES, and ES tagged the short, the intermediate term sell side. Nasdaq didn't tag it, so that's the first S&T divergence. That is an S&T divergence on the 4-hourly chart, though, 4-hourly time frame. So I'm not going to mention that just yet, but I'm going to be reading the 1-minute ortho instead for now. So here, it's delivered sell side, fair value gap, sell side one more time, and that second rally, it formed a bullish S&T divergence between ES. So here, the bullish divergence sent price higher, displacement. It formed a fair value gap or BPR, whichever you want to use. You can use either or, but BPRs are more accurate, if you will. And then once that happens, we are bullish. Basically, the order flow is bullish. It turned bullish, right? The S&T divergence, displacement above the short-term buy side. Now you can look for potential buy side targets. Now, if I zoom out a little bit, the old S&T divergence is here. This is high probability target. If it breaks out of there, it's going to go for the other divergence. These are original consolidations in the market maker buy models, okay? And this is smart money reversal. So it broke out, displaced, fair value gap retest, displaced one more time, and then this time it's coming for, there's also breaker block here, I can mention that as well, breaker block and order block along with it. Then it was just a slow grind. So in that price action, there's nothing much actually to talk about really, but they're like, minor fair value gaps. The first, the IFED fair value gap right there, the accumulation fair value gap right here, and this is also forming the order block. So we have this order block here, and then if I zoom in a little bit, you'll see this is a rejection block as well. So I'm not going to keep them on the chart just to keep it clean. And it went slowly grinded higher and higher and higher. In that price action, there was never an S&T divergence at the high, so never bullish or bearish rather signs pullback signs whatsoever, so it just kept going for the S&P divergence high, which is these two lines here. I'm going to keep the upper one, and then this placed above it. Not price action. Let me just pull up ES. Initially, it didn't form a divergence, right? So it just came down for whatever reason, and then tried to rally. So here in that rally, you see that? Yes, actually take the buy side. Nasdaq didn't. So this is the first bearish S&P divergence in the leg. That means, which means the first leg is completed. Now it's going to be either pulling back into range equilibrium of the first leg, or it's going to be reversing and targeting this specific sell side, right? So here what you can do is using that divergence. Now we have a framework from the lows to highs, and it gives a dealing range EQ, right? If you're bullish, if you have a bullish sentiment from the higher time frame, you can anticipate before it touches here, you can anticipate that it's coming down into the range EQ and going for the buy side, keeps going for the buy side for the second leg, right? So this divergence, let me just mention that as well. It is not a 1 minute divergence, okay, guys? I teach this a lot because there's a confusion about it. This is a 5-minute S&P divergence. This is a 1 minute S&P divergence, okay? So there's a 5-minute divergence from S&P low to S&P high. This is range EQ. Now you can anticipate a pullback in the range EQ. Now it touched the range EQ perfectly, whipped, and rejected off of that level perfectly. Now you can anticipate. Now what we're looking at for the second leg is the S&P high right here. This is the short-term buy side for the first leg, and the second leg should actually violate that high. So it doesn't necessarily mean it's going to break out of there, but it should at least tag that high. So this is the short-term buy side, or low-hanging fruit objective, whichever you call it. Drawn liquidity for the second leg. Let me put it. And it delivered quite generously. So here in this price action, there are a couple of things I have to mention. The range EQ retest, rejected, formed a rejection block, immediately retested that rejection block. This is a very, very good entry. Like if you catch that, I saw it during live. If you catch this, your stop loss will be only 6 points because you're going to be using the range EQ low, and you're going to be trusting the rejection block. So here, let me zoom in a little bit. It's kind of chopped it a little bit, and that's normal because there was news at 1 o'clock, 1 p.m. basically, the auction bonds, and the bond auctions rather. But a couple things that I have to mention here. So it kept pressing higher and higher with no S&T divergence whatsoever. Kept going higher and higher, and just before 1 o'clock, it formed a bearish divergence at these highs. So ES actually took this high, Nasdaq didn't. Now what that means is now you have a short-term dealing range on the 1 minute. And at 1 o'clock, once the bond auction news releases, we tested that range EQ of the short-term dealing range and sent it higher. In that range, in discount, there are a couple things. Rejection block there, and then there's an order block here. You can use both of them. The order block, like you can take it from the wick, I suppose. So the range EQ retest, and immediately after it sent the price higher. Now here, one thing I have to mention though, the short-term dealing range does not necessarily have to form, guys, okay? So this doesn't have to be there. The range EQ bounce off of the first leg could be also enough. But here in this case, because it was way too choppy, like too much back and forth, it was not moving at all, right? It formed a second short-term dealing range. So 101 precisely, this is Newsweek, sent it down to the range EQ of the shorter dealing range, and immediately after it rebalanced towards my side. And that delivery was a very, very, very generous move from the wick to there, 50 points precisely. That's beautiful. Then here, actually, let me just annotate that as well. The fair value gap right there. I'm not sure if that caused an SMT there though. Let me just check it real quick. Yeah, no SMT divergence there. Tag the buy side, and this delivery, now it formed a new bearish divergence. What that means is the expansion leg is now completed, right? Let me just make this red, so I'm gonna distinguish. This is also red. Right. What this means is now you have a new dealing range, and now you can expect a pullback. If it's a bullish delivery, it's gonna respect the range EQ basically. There is also divergence here on another time frame, but I'm not gonna get into it. So here, the new S&T, the new dealing ranges from the 101 news low to the S&T high. You can actually use, let me see, 1 second. You can actually use this low. That's the order block, that's why, yeah. I'm gonna use that one. It's because this is the S&T low, first of all, and secondly, this is the order block, not here. So the range EQ, the bearish S&T sends down into that range EQ. This is the pullback. Immediately forms a rejection block there, rejects it, forms an order block. That order block could be an entry, and this is a high probability order block because of the rejection block as well, and it sends for the short-term buy side right there. Let me actually keep this red, and then I'm gonna do this black short-term buy side. Then there's displacement. This is plus OB. I'm just annotating everything I see just for the sake of a screenshot. The displacement there. There are a couple fair value gaps. Accumulation fair value gap. IFED fair value gap right here. Sends price even further. There are, looking at the highs, there's a little bit of divergence here. The market didn't form any pullback whatsoever. It just sent it higher instead. Oops, didn't mean to do that. So kept pressing higher, no divergence. When there's no divergence at the highs, like every down move should be you should be saying like, okay, this move is just forming an order block basically. Okay, this is just a manipulation. You don't go short in those fair value gaps. So that being said, this is not a market structure shift, nor this is not a breaker block. Okay. So if it wants to continue going lower, what it needs to do is using this fair value gap, it's gonna form the first S&T divergence right there within that fair value gap, okay, because this is a V-shaped formation. So it didn't do that. Instead, it formed a bullish S&T divergence at the levels with equals though, and price sent higher. This is the short-term buy side for the S&T target, and then it kept pressing higher and higher. Let's see, kept going higher. There is no bearish S&Ts. Going for more. There's the first S&T divergence, the bearish one. Now you have a knee dealing range. Now you can do two things here. You can either take it from the S&T low all the way to the high. That's not wrong at all. Or you can use the S&T highs. That's also not wrong at all. Okay, you can do either or. It's just a personal preference. So I'm going to use the S&T high. Actually, you know what? Let's use the upper one. I mean, this is more precise, but I'll use it for the sake of this conversation. So you basically need to sit through all this first price action. Okay, that's your job. If you're short and targeting the range EQ, that's fine. But if you want to go long, you don't go long in that price action until it taps into range EQ. Okay, you sit through it. That's how you filter the PT arrays, guys. And the consolidations. So here, this is the short-term buy side now. And I wanted to say one more thing. This is the discount portion of that fair value gap. I want to say something actually here. I forgot. But anyways, so here at the lows, I'm looking at the lows. It formed divergence within the range EQ and within the discount fair value gap. another S&T divergence. Now that means the price is ready to run. Once it forms, you can actually, once ES tags the sell side here, you can actually go long. Stop loss will be above below the lows. That's an aggressive entry, but it is a very good entry in my opinion. And I think everyone should be growing into doing that at some point whenever the drone liquidity is clean, when you have the actual drone liquidity anticipated. Okay, not every S&T, you don't want to do that every time. And also, if you're long, let's say down here, as it forms a new dealing range, you can actually use the new dealing range EQ and the PD areas on the leg for your new stop loss. For example, you could put your stop loss maybe not into discount fair value gap, but maybe below here. Or if you want to be less aggressive, you can put it below here. I wouldn't put it here. I would rather put it there. But if you want to hold runners or something, that's how you manage your position. Here, normally, traditionally, I would put here, but because this is equals, I wouldn't use that. I would rather have it here because this could have reversed down here below the range, below the equal lows. So that delivered the short-term buy side, kept pressing more, and closed the day right about there. So that was pretty. I would say today was strangely pretty clean price action. Like very strangely though. I definitely didn't expect. I didn't anticipate this. Not gonna lie, guys. Definitely not. I thought today would be enough with the second leg, and then price would come back in the range. Didn't happen that way, but it's what it is. Still a good price action on the 1 minute basis. So let me take a quick screenshot of this. How can I? Whatever. Short term on. For a dash line, I just want to do this real quick. Short term, medium range, EQ. Alright, let's take a screenshot of this. Boom, boom, boom. Alright, cool. So let's take a look at the market on the higher time frame. I mean, today was a breakout day. Obviously, it broke out from the range. So we had an accumulation here, just broke out of there. There is the 4-hourly S&T divergence right now present in the marketplace on the 4-hourly. So I'm definitely expecting more bullish or more buy side delivery. It comes down to, you know, narrative, but I think what we're gonna have is, because this is the first accumulation after a V shape, I think this is gonna go just like keeps going and goes basically like until it forms bearish S&T divergence on maybe 15 minutes or I would say hourly, at least hourly. So it depends on the overnight price action on CPI. The fair value gap will just send it. It's gonna IFED down here and gonna send it. If it can form this as a fair value gap, but I definitely don't want to see price coming down in this range here. I don't think that's gonna happen though, anyways. So it just needs to keep going higher. And the S&T low within the 4-hourly fair value gap, that's a great delivery. Even this accumulation is beautiful because this is a V-shaped reversal, V-shaped return, sharp return, whatever you call it, and that requires an S&T divergence, and we don't have that from these lows here. So this is the first S&T divergence, which means the first leg is just coming up, guys. That's why I'm very bullish on this. And what I'm going to tell you is just keep longing or look for long entries until the price stalls, basically. Okay. Don't look for shorts. It will form short entries or short opportunities. It'll give you that intraday for sure. Like you'll be able to trade pullbacks or sometimes 1 minute reversals and stuff. But I would rather have you guys just sitting through that price action, maybe like patiently waiting, price coming down into range EQ or something, or forming a lower time frame S&T divergence, bullish ones, and then pulling the trigger. That being said, that's it for today. I'll talk to you guys tomorrow. See ya.